Some accounting estimates involve relatively low estimate uncertainty and giving a risk to lower risk material milestone. Accounting estimate rising from entities that engages in business activities that are not complex. Accounting estimates are frequently made and updated because of the relative routine transaction. Accounting estimates are derived from the data of readily available, the published interest rates and dates or exchange trade, specific prices and security. Such data are referred to the observable and contents of the fair value accounting estimate. Fair value accounting estimate is method of measurement prescribing applicable accounting principles the reporting framework is simple and applied easily to the assets and liabilities and requesting measurement fair. The fair value accounting estimate, which is a model used with the measurement of accounting estimate, will be generally accepted providing assumption of input and uploading observable. For some of the accounting estimate, hereby it is a relatively high estimate uncertainty. Particularly, they are based on a significant assumption. For example, accounting estimated the outcome of litigation. The fair value accounting estimate is derivative financial system is not publicly traded. Fair value accounting estimate that may be highly specialized entity developing model used for which there is an assumption of input that cannot be observed in the marketplace. The accounting estimate is a wage revision agreement that negotiation trade union and the government sanction grading of uncertainty. Degree of estimate uncertainty. Degree of estimate nature of accounting estimate extracted for which there is a general acceptable method used by making accounting estimate. Subjectivity of the assumption used by making accounting estimate. All the financial estimate requires a measurement of fair value, including estimate. And so this it may be the case. Some financial statements affect where there is an active and open market providing availability and reliable information on the price of actual exchange occurs. In this extension of obligation, price quoted ordinance is multiple based to audit evidence of fair value. However, estimate uncertainty makes valuation method of the data are called, for example, valuation security is a quoted of active and open market at the lesser market price, which requires adjustment of holding security in relation to the market, subject to restriction in marketability, in addition to the public economical circumstances and prevailing in the same time liquidity of the in particular market may be impacted. For example, of a situation where the accounting estimate other than the fair value estimate may require allowance of doubtful accounts, inventory, absolute warrant, obsolescence, depreciation methods, use assets and useful provisions against the carrying the amount of investment where there is uncertainty regarding unrecoverability, outcomes of long-term contracts and provision, financial obligations and costs arising in litigation, settlement, etc. Examples of situation where the fair value of accounting estimates may be acquired in the complex financial situation, information instruments were not traded in the active open market, the share-based payment, the property and equipment held for disposal. Certain assets and liabilities are acquired in a business combination, including goodwill and intangible assets. The transaction involves the exchange of assets and liability between different parties without monetary consideration. For example, non-monetary exchange of plans for facilitate different lines of business. Estimation involves judgment. Estimation involves judgment based on the information available when the financial statements are prepared for many fund accounting estimates. These includes making assumption that makes the uncertain time of estimate. An auditor who is responsible for predicting the future conditions, transactions, and events that known as the times of audit may be significantly affect the management of action, assumption, and management bias. Management reporting frameworks often all the neutral, the freedom of bias, accounting estimates, and presence. However, in the influence of management judgment, the judgment is involved in unintentional and intentional management. As an example, result of motivation, assessment, delta result. Subsequently, accounting estimate management bias increase on subjectivity, including unintentional management bias is a potential for intentional management bias, and inherent subjective decision that is often rises in making accounting estimate. For continuing trial ingredients, possible management bias indicates about the audit of the preceding period, influence of planning and risk identification, assessment activities, and auditors of the current period. Management bias can be difficult to detect at the accounting level. It may be one of the identify, consider, and arrangement groups of accounting estimate, or all the accounting estimates. You can observe the number of accounting estimates. Although some of the management bias and current subjective decision in making such a judgment, and that would be known by management misleading misleading the users of a statement, where, however, there is an intended to mislead management bias is fraudulent nature. Measurement objective of accounting estimate. The measurement objective of accounting estimate can be very depend on the applicable financial reporting framework and financial items being reported. Measurement objective is some accounting estimate is a forecast to come or one or more transaction events and events and condition gives right to the need of accounting estimate. Other accounting estimate including fair value accounting estimate measurement objective is different and expressed in terms of value of current transaction financial statement based on the situation relevant to the measurement date, estimate market price and the particular type of assets and liability. For example, applicable financial reporting framework may require fair value measurement based on assuming hypothetical current transaction based knowledge of willing parties. Sometimes is a market price parties arm's length transaction other than the settlement of transaction given past future. Difference between the outcomes of accounting estimate and the amount of originally recognized disclosed financial statement thereon doesn't necessarily represent the misstatement of financial statement. In this particular case, the fair value of accounting estimate as the observing outcomes it's invariable affected the events and conditions subsequently the date of which measurement estimate for purpose of financial statement. Objective action 514 overall objective in the and the objective of audit to obtain sufficient appropriate audit evidence for the contents of applicable financial reporting framework. Accounting estimate including fair value accounting estimate in financial statements which are recognized and disclosed are reasonable. The related disclosure in financial statements are adequate. Important definition accounting estimate appropriate rate of money is absence in the prescribed manner of measurement. The terms used in the amount measured the fair value where there is an estimate uncertainty as means other amount of required estimate. This is essay addresses only accounting estimate involve measurement of fair value including fair value accounting estimates. Auditor's point estimate and auditor's range. Now, amount and range of amounts respectively derived from the auditor evidence for use is evaluated and managed on point estimate. Management bias. The lack of neutrality by management is in preparation, presentation, information. Management point estimate the amount elected by the management for recognition of disclosure in branch statements and accounting estimate. Estimate uncertainty, suspectability of accounting estimate and related disclosure are the inherent lack of precision in the management. Outcomes of accounting estimate, the actual monetary amount which is a result from the resolution of underlying transaction events and condition addressed by the accounting estimate. Auditor's responsibilities, auditor procedure. The risk assessment procedures and related activities of accounting estimate. When a performing risk assessment procedure and related activities to obtain understanding of the entities environment, including entities internal control, recommend SA 315. Auditors obtain understanding of following in order to provide the basis for the identification assessment of risk material statement for accounting estimate. The requirement of applicable financial reporting framework relevant to accounting estimate, including related disclosure. How management identifies those transactions, event, condition that may give rise to need of accounting estimate to be recognized and disclosed in the financial statement. Obtaining understanding, auditor shall make an inquiry to management about changes that will give rise to new revised existing accounting estimate. As the assessment of actual accounting estimate affect the ultimate decision of the firm. The match more than taken regard. It is highly important auditors conclusion based on the above. Obtaining understanding of how management identifies the need of accounting estimate. To prepare the financial statement, management has to responsible for understanding whether transaction event and condition gives a rise to need to make an accounting estimate, and that is necessarily accounting estimate has been recognized, measured, and disclosed in the financial statement in accordance with the applicable reporting framework. Auditor understanding that the entities and environment obtaining during the performance of risk assessment procedure, together with other audit evidence obtained during the course of audit, assess the auditor identifies circumstances and changes of circumstances that gives a rise to need for accounting estimate. The inquiry of management upon change in circumstances are included inquiry about others. The entity has engaged in few steps of transaction that may give rise to accounting estimate. Terms of transaction gives rise to accounting estimate that doesn't change. The accounting policy related to accounting estimate has changed the result of changes in the requirement of the applicable financial reporting framework. Otherwise, the regulatory other changes outside the control of management that has occurred and may require management to revise to make a new accounting estimate. New conditions or events has occurred that may give rise to need for new and revised accounting estimates. During the audit, the auditor may identify transaction events and conditions that gives rise to need to accounting estimate. As a management failure to rectify. SA 315 deals circumstances where the auditors identify risk committee and statement that management fails to identify, and including determine whether there is a significant efficiency in internal control regarding to entities, risk committee and statement process. how the management makes accounting estimate. How management makes accounting estimate and understand the data and how which they are based, including method, including applicable model, including making accounting estimate relevant controls, whole management has used an expert assumption underlying accounting estimate, whether there has been or to been a change for period prior between the method and giving accounting estimate so far as why, whether and if so the management has assessed the effect of assessed estimated uncertainty. Auditor shall review the outcome of accounting estimate, including prior period financial statement, and whether applicable subsequent re-estimate of purpose of accounting year. The nature and extent of auditor's review takes place in the nature of accounting estimate, whether the information obtained from the review would be relevant, identifying assessing risk committee and statement accounting estimates made in the current period of financial year. However, the review is not intended for all the questions of judgment made in the prior period, that is based on the information available at the time. Estimate uncertainty accounting estimate that gives rise to a significant risk in addition to the substantive procedure performed to meet the requirement of 300. Auditor shall evaluate under how the management has considered the alternate assumption or outgoing, why it has rejoined them, rejected they already rejected them. Now the management has otherwise addressed the estimated uncertainty in making accounting estimate, whether the significant assumption used by the management or reasonable, whether relevant and reasonable for significant assumption used by the management appropriate applicable of the assumption applicable financial reporting framework. Management is intended to cash on the specific course of action and ability to do so. If auditor judgment management does not adequately address the effect of unestimated uncertainty or accounting estimate gives rise to significant risk, auditors shall consider necessary development range in which they evaluate the reasonableness of accounting estimate. Recognition measurement criteria for the accounting estimate gives rise to significant risk. Auditor shall obtain sufficient appropriate audit evidence whether following accordance with the requirement of applicable financial reporting framework. Management decision to recognize or not recognize accounting estimate in financial statement and select the measurement basis of accounting estimate. Identifying knows assessing the risk committee statement. In identifying assessing the risk committee statements are required SA 315. Auditor shall evaluate the degree of estimate uncertainty associated with accounting estimate. Auditor shall whether the auditor's judgment and one of the accounting estimate that have identified and have high estimate uncertainty and give rise to significant risk. Responsible assessor risk committee based on assessor risk committee statement, auditor shall determine whether the management has appropriate applied the applicable reporting framework and relevant to the accounting estimate. Whether the method is making accounting estimates estimate appropriate to terms of and applied consistently. If there is a change in accounting estimate or in the method used by making those prior period as appropriate to the present accounting. In response to the assessed risk committee statement, auditor shall understand one or more of the following taking the accounts of nature of account statement, determine whether the events occurring after the data of financial report sufficient and audit evidence regarding accounting estimate, check of data using management for making accounting estimate. Auditor shall use evaluate whether the method used in the measurement of appropriate circumstances and assumption made by the management responsible are reasonable in the time light of the measurement objective for the applicable financial reporting framework. This is achieved by testing the extent of the data of which accounting estimate based accuracy complete and relevant, whether the accounting estimate has been properly determined using data and manage assumptions, considering the source, relevance and reliability of external data, re-calculating accounting estimate and reviewing the information about the accounting estimate for internal consistency, test check of effectiveness of control over the estimate and also the management to an appropriate substantive control. While taking determining the matter, identifying the assessed risk committee on the statement, auditor should consider whether specialized skills and knowledge in relation to one or more aspect of accounting estimate is required to order to obtain sufficient appropriate audit evidence. Evaluating the reasonableness of accounting estimate, determine auditor shall evaluate based on the auditor evidence whether the accounting estimate of financial statement is reasonable or conduct of applicable financial reporting framework and statement. Auditing report and disclosure requiring of financial statement accounting estimate. Auditor shall obtain sufficient appropriate audit evidence about the disclosure in the financial framework and related to accounting estimate in accordance with the relating to applicable financial reporting. For accounting estimate that gives rise to significant interest, auditors shall also evaluate the adequacy of disclosure in the estimate and uncertainty of financial statement in the context of applicable financial report framework. The presentation of financial statements according to the applicable financial reporting framework, including adequate disclosure of material mismatch. These direct disclosures under assumption use, the measure of estimated use, including applicable model, basis of selection of estimate, any changes in method of estimate by the prior period and subsequent effort, sources of applicable implication of estimate and uncertainty. The relevant to the accounting estimate has significant risk when even when the disclosure of accordance with the applicable financial reporting framework, auditor may conclude that the disclosure of estimate uncertainty is adequate in the light of the circumstances and factor involved. Written representation auditor shall obtain written representation from management whether applicable and change in the governments whether they believe significant assumptions used in assumption accounting estimation are reasonable. And documentation accounting estimate audit documentation include basis of the auditor's conclusion about the reasonableness of accounting estimate and disclosure and give rise to significant risk. Indicators of possible management biases if any. SA 540 auditing accounting estimate including fair value of accounting estimate and relevant disclosure. Auditor's responsibility to use of accounting estimation management responsibility following an unbiased approach of preparation of accounting estimate to make appropriate disclosure and financial statement about the discussion estimated made. Auditor's responsibility for audit procedure. The perform risk assessment procedure related risk, identify assess the risk of material misstatement, respond to the assessed risk of material misstatement, evaluate the reasonableness of accounting estimate. Audit report, adequate disclosure and material matters such as assumption, method estimate, basis of the method selection estimate, any changes in the applying of estimate complied with the prior period, source of implication uncertainty, if significant risk even exist, even the adequate disclosure of auditor may conclude the disclosure of estimate uncertainty inadequate light circumstances of fact involved. Control the quality of audit work. Under the quality of the firm has obligation to establish and maintain a system of quality control, provide reasonable assurance that the firms and personnel comply with the professional standard of regulatory and legal requirement. The reports issued by the firms and engagement partners applicable appropriate circumstances within the context of the firm control system of a system quality control. Engagement team has a responsibility for implementing quality control procedures that is applicable in the audit engagement and provide the firm that relevant information enable the function of the part of the firm's system of quality control relation to independence. The engagement team is the entity to rely on the firm's system of quality control unless information provided by the firms and other parties suggest otherwise. SA220 deals with the audit quality individual engagement level. The objective of the auditor to implicate quality control procedures and engagement level that should provide auditors with reasonable assurance that the audit complies with the professional standard and regulatory with the legal requirement. The auditor report ensured appropriate circumstances. Analytical procedure prior to the audit of the towards finalization. When designing and performing substantial analytical procedure, SA220 analytical procedure of auditor shall determine suitability, particular substantial analytical procedure for the given discretion, total amount of described risk, material misstatement, test of details if any fraction. Evaluate the reliability of data which audit has expected and record the amount of ratios developed and taking account of source comparability and nature and relevance of information available and control over preparation. Develop an expectation on record amount of ratio and evaluate whether the expectation of sufficient purpose is identified in the statement that individually when aggregate with other manifestations and causes the financial statement to material mistake. Determine the amount of difference of recorded amount and expected value that is acceptable without further information required. Analytical procedure assess the forming and overall conclusion. Auditor shall design and perform analytical procedure near the end of audit and assess the auditor that are forming overall conclusion whether the financial statement are consistent with the auditor's understanding of entity. A conclusion drawn by the result of analysis of procedure designed to perform in accordance with the intended to verify the conclusion formed during the audit and individual component of relevant financial statement. These assess the auditor to draw a reasonable conclusion with which basis of audit appropriate. The result of analytical procedures identify the previous uncertainty, a rise of material misstatement due to the SA315, require the auditor to revise auditor's assessment, a risk of material misstatement, modify the further planned audit procedure accordingly. Analytical procedure performed in accordance with the above and be similar to those who had used risk assessment procedure. Investigation result of analytical procedure. If an analytical procedure performed according to say 520, identify the fluctuation and relationship that is inconsistent with other information or different from the expected values of significant amount. Auditor shall investigate and define and differs by inquiring the management, obtain appropriate audit evidence related to the management responsible, and performing other audit procedures necessary for committees. In need to perform other audit procedures rise. For example, management is unable to provide an explanation to the audit evidence. Obtaining relevant management response is not considered adequate. Material risk assessment and internal control. Understand the concept of risk-based audit, internal control, and risk assessment. Identify the components of audit risk and internal audit and internal control. And learn the review system of internal control. Know the internal control nature, system nature, scope, objective, function. Gain knowledge of reporting to client internal control weakness, and know the framework of reporting internal control. Practically above concept of using examples and case studies. Material risk of material risk assessment, internal control, component of internal control nature, scope, objective, and structure, review of system of internal control, manner, evaluation of internal control risk assessment, framework reporting, internal control, reporting and clients of internal control weakness, and auditors risk assessment audit. CA auditor, CFO is auditor of company of last 3 years. He sent assessing the risk of management, assess the risk, audit risk of engagement before proceeding. A question stuck in his mind. Is such an exercise helpful for practically how assessing audit risk is due to useful for auditors every year. He seemed to call salty approach, turning out the webinar topic heading of illuminating insight. Not only assessing the risk as mandate of the standard of auditing leads to audit effectiveness, audit quality. Besides, it helps auditor to plan audits in a better way. And by understanding the company's internal control, auditor shall identify whether the area which are drawn to a statement and whether due to errors or fraud. The audit risk assessment need not to be same at the last year due to new development like laws, change in business model for companies, due changes in industry which is a client company operates and due to our practice. He also learned how understanding of business risk of companies strategy formulation by the company leading to business risk and influence of audit risk. This is when company has established a plan to deal with the business risk panel. Auditors gain comfort regarding managing ability to deal with the business risk and evaluating the plans. Evaluation of control of the companies helps auditors to zero in other areas which controls efficiency. It's also aid in discovering whether the area of controls uses missing, non-existing, it controls not effective or missing. Risk of material misstatement or life increasing due to increasing control risk. By using a needed risk of assessment procedure like inquiries, inspection, observation, auditors can understand the area of risk material misstatement. It will ultimately lead to performing and effectiveness of our quality. What happens when audit identifies significant deficiencies in internal control of the company? Besides having impact on auditors, auditor has a responsibility for communicating the deficiencies to the management and responsible for governing the company. It may include setting the boardrooms to take notes on the same and intend corrective action. Besides communication also end up saving auditors and it is due to the reason which already take premature steps in the regard. Significant deficiencies already communicated management and those charges defense in the audit later. Materiality in risk audit risk. SA 320 concept of materiality in applied to the audit and both planning and performing the audit. Evaluating the changes of identifying misstatement and audit of uncorrected misstatement. And for the financial statement forming an opinion, auditors report materiality auditor consult to go with audit, particularly when identifying and assessing the risk of material misstatement, determining the nature, timing, and extent of further audit process, evaluating the effect of uncorrected misstatement if any of the financial statements, and forming an opinion in auditor report. Risk assessment assesses the level of risk in the various physical business parts. Risk assessment processes and business environment, regulatory environment, organization structure, and organization business environment changes and specific concern of management and audit committee and determines area of the greatest risk. Address the area required in the external forecast, nature of entities, objectives and strategies, measurement, review, and financial performance. Identify the area what is wrong, listing of events, and identify the risk that could result in misstatement in the financial statement. Identification of risk. Auditor risk is a risk expressing inappropriate audit opinion financial statement that are materially misstated. Any material miserrors caught by the control, caught by any auditor, wrong option, inherent risk, control risk, detection risk, and audit risk. Audit risk component. Major components of audit risk are described in the table below. Inherent risk. Description: substantiability of the asserted tool is susceptibility of an assertion to a misstatement that could be determined individually or when aggregated with other misstatement, assuming that there is no control method. Inherent risk is addressed in both financial statement level and assertion level. For example, technology development might make a particular product obsolete, thereby causing inventory to be more susceptible to overtake. When the technology, when the business and other risks that arise on the entity subject to nature of operation industry, regulatory environments operates in the size and complexity. The risk of material misstatements is based on nature and accounting balance class of transaction. Right, a particular concern of auditor made the complex calculation which can be misstated, high value inventory, accounting estimate that is subject to significant measurements, lack of sufficient working capital to continue operation, decline in violent industry, many business fails, and technology development that might make particular product obsolete. Control risk. Two, internal control places a migrate the internal risk that entities internal control will not prevent or direct the correct or timely basis than misstatement that could be material individually and when aggregated with other misstatement. Entity should identify, assess the business and other risks just for or respond to that by designing and implementing system internal control. Entity level controls such as board oversight and IT general controls, HR policies, and pervasive to all the assertion whether control level controls, active level controls, generally to specific assertions. Some control risk which always exist because in current limitation of the internal control, the auditor is required to understand the entity's internal control and perform procedures to assess the risk of material misstatement and assertion level. Decision risk. This is a risk of auditor should not detect and misstatement and exist an assertion that could be material, either individual and aggregated with other misstatement. The acceptable level of detection is given reduction in the audit level be a adverse relationship with the assess risk of misstatement assertion level. Auditor identifies assertion where there is a risk of material misstatement and concentrated audit approach. Yes. Designing and evaluating the result of performing procedures, and the auditor should consider the following possibility: selecting the inappropriate audit procedure, misapplying the appropriate audit procedure, select and misinterpretation result of the audit procedure, interrelationship of audit risk, uh, inherent risk, control risk, combined risk, reduction risk, inherent risk, low risk, moderate risk, high risk, business fraud and other factor poses the risk of audit. Control response with material inherent risk, entity level governance IT and strategic governance, culture, value, competence, attitude control, business process, revenue, purchase payroll, entity risk, slow risk, moderate risk, revenue risk, high risk, strategy, governance, culture, value, competence, and detection risk, audit procedure, tester, control, subjective, and acceptable level of audit risk. Okay. Mathematical audit risk is expressed in the product of inherent risk, control risk, and um, arithmetic risk is equal to inherent risk, control risk, detection risk. The audit risk two component: the risk of material misstatement. This the risk of material misstatement. The risk of a financial statement could be material misstatement, pro to audit and detection risk. The risk of auditors will not be able to detect some statement. Relation to be following: audit risk equal to risk of material misstatement to detection risk. Risk of material misstatement is equal to risk of material misstatement. Risk that is materially misstated may exist in the financial statement before start of audit. It has two components: inherent risk and control risk. This in this control risk, inherent control risk. And the detection risk, the risk of material misstatement remains undetected even if all the audit procedures are applied. It would be noted that combined level of inherent risk, control risk inversely related to the detection risk, and audit materiality is also inversely related to the audit risk. Audit risk, the risk of expressing an inappropriate audit opinion and financial statements are contained material misstatement. Two elements of audit risk. The risk, the risk financial statement contain material misstatement prior to audit risk. Income risk and control risk. Risk auditor will not detect in the misstatement detection of engagement risk. The engagement risk or engagement risk. Objective of the audit to reduce the audit risk to an acceptable level, and auditor shall assess the risk of material misstatement, limit the detection risk. Objective of the audit to reduce the audit risk to acceptable level. This may be achieved by performing procedures that respond to the assess the risk to financial statement, loss of transaction, account balance, and assertion level, number of engaged assertion, and including material present also financial statement. This lead to rejection, measure, representation, disclosure, various element, accounts and disclosure in the financial statement. Management ABC has asserted the auditors that the sales and balance of accounting record contains all the sales transaction, completeness transaction. The transaction took place and valid occurrence accession, complete accession, occurrence accession, occurrence accession. The transaction has been properly recorded. Accounting records an appropriate accounting level, accurate and cut off accession. So complete முடிஞ்சு the occurrence take place, transaction take place, and completeness, occurrence and accuracy instead of Essay 3 on identifying and assessing the risk of material misstatement through understanding the entities environment and categorizing types of assertion that use is audited to consider the different types of potential misstatement and the assertion class of transaction events or period of occurrence, completion, account accuracy, cutoff, and classification. Occurrence transaction events that has been that recorded and occurred and pretending to consider complete. All the transaction events that should have been recorded and have been recorded. Accuracy amount and other data relating to the recorded transaction events have been recorded. Cut of the transaction and event date has been recorded in corrected accounting period. Classification transaction events has been recorded in proper accounts. Assertion about the accounts balances and period in existing rights and obligation, completed validation allocation, existing assets, liability, equity, interest, existing rights and obligation. The entity holds or rights or holds or rights holds or rights or the asset, liability, obligation of entity. Completes all assets and liability, we can interest that should have valuation of allocation of the assets and liability, equity, interest or including and included in the financial statement, appropriate accounting and result of valuation allocation adjusted appropriate limit. Assertion about the presentation disclosure, occurrence of rights and obligation, and disclosure events and transaction other matter would be occurred pertaining to entity. Completeness on the disclosure that would be have been completed in the financial statement having occurred. Classifying understandability of financial statement, appropriate percentage of description and disclosure existing presently. Accuracy and validation financial and other information disclosed in fair and appropriate manner. Auditors are required to assess the risk of material misstatement two levels. First, at the overall financial statement level, which refers to the risk of material misstatement that related pervasively in financial statement as a whole and potential effect of other reasons. If the top accountant is not competent enough to assess the risk, it's quite possible that error could occur in financial statement. However, nature of such error will not obtain confined single accounting balance transactions teams disclosure. In addition to the error is not likely to confirm single transaction, such as completeness of sale, it would be easily reliable assertion and this accuracy systems evaluation. Second, related to the risk of reliable information various assertion, class of transaction, account balance and disclosure. This may reach accounting balances, class of transaction disclosure assesses the risk. There's high, moderate, low, which made each individual CVAV diagram low. While considering the valuation assertion, auditor should assess the risk of a payable low, whether the inventory as a absolute factor. Auditor should assess the valuation risk at high. Another example, which is a risk of the material statement due to completeness, missing item of inventory below the low, but high in relation to the sale balance. Difference between the assessing the risk of overall financial system control and assertion level illustrated below. Financial statement overall, account balances, class of transaction, presentation, account balances, inventory, cash payable, class of transaction, receivable and expenses, revenues and expenses, presentation, disclosure, commitment and related parties, assertion level, CVA. This assertion used in the diagram C is completeness and E as existence, E is accuracy and V CEV CEV is valuation, occurrence, existence, completeness. Step of identifying the risk assessment. Assessing the risk of it, assessing the significant of assessed risk, impact and occurrence, and also revive the material accordance with the specific outcome, specific accounting balances. Determine the likelihood of assessing the risk and occur to impact accounting procedure. Document assessing the effect, consider the impact of risk on other assertion, complete, existent, accurate, validity, and valuation of percentage and relevant to the account balances, class of transaction disclosure. Identifying the degree of significant risk and required the separate attention, separate audit as a planned audit procedure would directly address it. Inquiry document or management purposes. Consider the nature and internal control plays and possible effectiveness of mitigated risk control. Ensure the control. Routine nature and periodic use of monthly. They are designed to prevent attack in correct norms. Manually automated. Consider the other unique characteristic of risk. Consider the existence of any particular character risk or risk class of transaction, account balances, or disclosure need to be addressed. Designing the further audit procedure. An example that include high-value inventories, complex contractual agreements, absence of paper trails, certain transaction, and large percentage of sales comes from the single customer. Possible potential statement indicates the completeness transaction not identified, source of documents are not presented, source documents are not captured, rejected source documents are not presented. Existence of a fictitious unauthorized transaction entered into source documents oversight. The transaction duplicated in the source document, capture of a source document duplicated, invalid source documentary capture in subsidiary ledgers, recording source documents and capture inaccuracy. This process of transaction is inaccurate adjustment subsidiaries cut off transaction that is occurred period of not. During the process of extracting an exception report, auditor noted that exist numerous purchase entities without valid purchase order. Analyzing in this percent, 40% of purchase order made without valid purchase order, and also few purchase orders validated after the actual purchase. Thus, there is no new reconciliation between goods received and goods order. Assessing valid purchases, pervasive accounting balance, accounting level, accounting balance affected purchase and accounts payable. Audit procedure following procedures are addressed in validating account balances. Making selection of purchase, review response to the vendor purchase request, and reconciliation of accounts. Review vendor listing along with the aging details. Follow the material amount paid before the normal credit period. Analyze the reasonable expression. Meet with the company's purchase order. Obtain responses to any inquiries regarding the purchase made without purchase order. Discuss the summary of the issues of the client. Risk based on audit approach. Audit should be a risk based. The purpose of access the areas of greatest risk of achievement in auditing entities objective. Risk based audit approach of audit that analyzes the audit risk and areas of maturity threshold. This audit analyzes developing audit program that allocate large portion of audit resources in high risk area. Auditor should not do not normally need to perform specific audit procedures on all area of audit. Keys need only design audit programs and procedures in area and yearly identified major gaps result of financial statements being materially misstated. Risk-based audit is essential elements of financial audit. Both the audit attestee audit of financial statement, audit of financial statements and transaction, including evaluation of internal control, and focus primarily in identifying and assessing the financial statement material risk, providing framework of reducing impact of financial statement, and identify the risk of acceptable low level regarding financial statement. It also provide indicates a risk of pace of option. Improve the auditing risk management and control process. They afford of opportunity to audit to improve the master's operation and recommendation to risk that do not have a current impact on financial statement, but impact on auditors entities obligation and straight strategies of performing the longer terms. In the context of performance audit is at risk of delivering activities and scheme of programming entity and economy efficiency effectiveness awareness of the area put into the program resources at the risk the point of view economy and efficiency and effectiveness of help the area focus attention to this risk analysis provides a framework of assurance and performance hunting. Audit risk analysis. The auditor should perform analysis of the audit risk and the impact of auditing before undertaking a specific audit procedure. Risk assessment is a subjective process. It is part of the personal judgment of the auditors and the particular circumstances. It is a risk that auditors unknowingly fail to appropriately modify the opinion and financial statement that is materially misstated. Auditors what about the errors and fraud? The error and unintentional mistake resulting from omission, which is legitimate transactions or balances are excluded from the financial statement, or a commission as error of transaction or a balance are included in the financial statement. Fraud is an intentional misstatement as accounting balances supporting best documents from which financial statements are prepared. It is intended to deceive the financial statement user and the funds in the preparation. Auditor has an responsibility to plan and prepare the audit to obtain reasonable assurance whether the financial statements are free from material misstatement and whether cause error fraud. The error risk may rise from error of principal, estimate crucial information, processing, financial reporting, process and disclosure. The fraud risk including manipulation, falsification of accounting records, misrepresentation of financial statements and events, transaction, other significant information, misapplication of accounting principle, misappropriation fund. General step of conduct of audit risk, risk of based audit. Audit is objective risk based audit is obtained reasonable assurance that no material misstatement causes of fraud error exists in the financial statement. They involve these three key steps: assessing the risk of material misstatement in the financial statement, designing and performing further audit procedure to respond to the assessed risk and reduce the risk of material misstatement in the financial statement to acceptable level, and issuing appropriate audit report based on the auditing finding. The risk-based audit process is presented in the three distinct phases: risk assessment, risk response, and reporting. Risk assessment. The risk assessment is a phase of auditing involves following steps: performing client acceptance and continuing procedures, planning the overall engagement, performing risk assessment procedure to understand the end business and identifying the inherent control risk, identifying the relevant internal control procedure, and assessing the design and implication which controls that would prevent material misstatement from occurring, detecting a correct misstatement after they have occurred, assessing the risk of material misstatement from statement, identifying the significant risk that requires special audit concentration on those risks. The substantial procedures alone is not sufficient. Communicating any material weakness in the design and implementing of internal control to manage it and those charges comments, making an informed assessment of the risk of material misstatement of financial statement level and assertion level. Activity, purpose, documentation, assessment activity, performance, acceptance of the continuing procedure, plan the audit, and perform the risk assessment procedure. Purpose, whether performance or acceptance or continuous procedure, other does whether the accepted engagement, listing the risk factor indicator, plan the audit, develop an overall audit approach, overall audit strategy, materiality, audit teams, performance risk assessment procedure, understand the entities, identify the assess risk management, business fraud risk, including significant risk, designing implementation of relevant internal control, assessing the RMM at the financial statement level and assessment level. Risk assessment. The phase of the audit is to design and perform whether the audit procedures that respond to the assessed risk committed in the statement is provide evidence necessary to support the audit risk response report activity purpose and documentation. Design further audit procedure, perform further audit procedure, develop an appropriate response to audit risk, reduce audit risk to acceptable level. Documentation level, update the overall audit strategy, detailed audit plan, links assessing the risk of further audit procedure, or perform audit findings, staff supervision, working paper review. Some of the matter auditors should consider planning the audit approach assertion that cannot be addressed by substantial procedural. It can occur where there is a highly automated process of transaction with little or no manual intervention. An effective existence of internal control that is tested and reduce a need a scope of other substantial procedure. A potential or substantial analytical procedure that would reduce the need of the other procedure. Need incorporate element unpredictability in performance procedure. Need the performance further audit procedure to address potential of management overriding controls of other fraud scenarios. Need to perform specific procedure address significant risk has been significant. Audit procedure designed to address assess the risk, including manufacture of testing the operation effective awareness of the control. Substantial procedures as test and details and analytical procedures. Before concluding the audit, because based on the result of substantial procedure and other audit evidence obtained by the auditor consider whether the assessment risk is confirmed. In the deviation from the prescribed accounting internal control, auditor should make a significant inquiries at implication whether based on inquiries auditor conclude that deviations such as the primary assessment or risk controls are supported. He should maintain the same analyze audit evidence obtained from the test of controls. This is whether the audit concludes assessment of risk or control need to be supervised and he modify nature, timing, extent of planned substantial procedure. Reporting is based on the risk assessment. Evaluate the audit difference obtained activity. Determine whether additional audit work is required. Additional risk assessment revised the risk procedure changes in material conclusion reached. The additional work at required, yes, then is back to risk assessment. No prepare the audit report, form an opinion based on the audit finding. A significant decision is conditions of signed audit opinion. Now, final phase of the audit is assessing the risk evidence obtained that determine whether it is significant and appropriate to reduce overall audit risk of applicable loan. It is important to the stage to determine if there is any change in assessment risk level of risk, whether conclusions drawn and work performed are appropriate, if any suspicious circumstances has been encountered. In addition to the risk is appropriate, assess the further the audit procedure performed required. Overall, when all the procedure has been performed, Continuous reaction, the audit findings those will be imported to the management where the charged with the counts, and the audit opinion should be formed and the decision made in appropriate reporting of audit reports. See the conducting of audit, statutory auditor of division wo, public office in issue insurance company going through dedicating the powers later companies head office notice that the survivors claim the property insurance policies based on estimate amount of 30 lakhs are appointed with division claims committee. However, the going through the supervisor appointed the three claims during the 5 years has been noted where the delegate power has been forward appointment as the division manager. In this stage, the auditor has assessed the risk committee on the statement law and derive how and the finding any change in the audit assessment. Have you recently appointed the auditor NGO group and finding upholding democracy first time? As NGOs unaudited and activities are limited on small scale. However, as only current year, the NGOs has a substantial donation on the foreign funds and NGOs crowdfunding donation. This government is now legislative power to cancel the FCR certificate to NGO since the working field which encompasses political and social field and acquisition of some counter accusation flying thick in us. What factor consider assessing the audit risk? Internal control risk and nature and scope of objective of risk. An internal control system consists of specific policies and procedures designed to perform management and reasonable assurance that goals and objectives believed important to entity to meet. Internal control system means all the policies of the system adopted by the government entities assess the achieving a management objective, ensuring that as far as the practical order to efficiently conduct business, including adherence to management policies, safeguard of assets and prevention reduction of fraud and error, the accuracy and completeness of the accounting error and timely preparation and reliable financial information. SA 3 and 5 defines the system, internal control process and design, implementation, maintaining of those charges governance and management of those personnel to provide reasonable assurance about the achievement of the entity's objective and regard to reliable financial reporting, effectiveness and efficiency of operation, safeguards of asset and compliance with the applicable laws and regulations. In the state where the set of financial statement present true and set a fair value is essential for the bank benchmark check the financial statement and completion with the framework. The accounting statement specified in the company set result is one of the criteria consisting of financial reporting framework on which company prepares and presents its financial statement under that and against which the auditors evaluate the financial statement presented true and the set of affairs resulting operation of the company is an audit of financial statements carried out under that. Auditor should obtain an understanding of the control environment sufficient to assess the management risk. Aware of the auditor should obtain understanding of the control environment as a supply sufficient to assess the management attitudes, awareness and action regarding the internal control and importance of the entity. Some of the understandings help the auditors to make a primary assessment of adequacy in accounting and internal control system based on preparation of a financial statement and likely and time in an extended audit procedure. Ordinary development overall audit plan does not require the understanding of internal procedure. Every financial statement assertion gauge control balance as a transaction class. Auditor judgment as far as that is sufficient or proper audit evidence affected the risk of degree of risk assessment. Auditor shall obtain audit evidence that could test the control support of assessment and the control risk of which less than high. Control assessment control risk. This is more evidence auditor shall obtain accounting and internal control that substantially design auditing effectively. Now, what is obtaining audit evidence about the effective operating internal control audit evidence? How they are applied, how the consistency they are applied during the period, and by whom they are applied. The concept of effective operating recognized some derived may have derived is a prescribed control that is by caused by the factors or changes of key person, site for seasonal fluctuation, volume of transactions, human error. When deviations are detected, an auditor must specific inquiry regarding these matters, and particular in the time of staff changes and key internal control fluctuation. Auditor shall ensure that the test of control appropriate covers all the period of change fluctuation. Based upon the result of test of control, auditor should evaluate whether the test controls are designed and operated and contemplated in the preliminary assessment of the controls. The evaluation and deviation on the result of the auditors conclude assessment risk of control risk need to be revised. In this case, auditor should modify the nature, timing, extent of plan procedure. The auditor should obtain audit evidence about the proper segregation of duties by observing individual who applied control procedure by making the inquiries appropriate, whether the audit evidence obtained by some test control such observation reservation pertaining only the point and time in which procedure was applied. Auditor may decide whether to supplement these procedures in which test of control capable of providing audit evidence according about the period of time. Auditors should consider whether the internal controls were in use throughout the period. If the substantial development controls are used in different times as period, auditor should consider each separately. Break down the internal control specific portion of the period requires a separate segregation of nature, timing, extent of audit procedure to apply transaction and other events separate. Following nature, scope, and objective of internal control system. In nature of internal control, the set of primary generating policies and procedures adopted by the management of enterprise in prerequisite of the organization efficient and effective performance. It is a primary objective responsibility of each management to create and maintain adequate system and internal control appropriate size and nature of the business entity. Internal control is a set of process designed to facilitate support the achievement of business objective. A system of individual and internal control is based on the considering significant risk of operation, complaints and financial reporting objectives, improving business effectiveness and including compliance with the reporting objective. Scope of internal control. The scope of internal control extends beyond the accounting controls and including all the administration control concerning the decision-making process leading to management authorized transaction. Such controls include production times and motion study, pricing policy, quality control, work standard, budgetary control, policy of price and quality controls. It is an independent financial audit. Auditor is primarily concerned with the policies and procedures have been bearing the assertion and underlying financial statement. It comprises of primary control relating to safeguard of asset, preventing reduction of fraud and error, accuracy and completeness of accounting, data records, and timely preparation of reliable financial information. Administrative record is on the other hand have any remote relationship with the financial records. An auditor may evaluate this administration control which is bearing the reliability of financial record. The function therefore is effective internal control. The process effective by the people that supports organization several ways, enabling to provide reasonable assurance regarding the risk or achievement of objective. Fundamental to system internal control is an integral of the activities of the company and not something practiced in isolation. If the production statistics were used in basis of analytic procedure, they control to ensure the accuracy of such data should be relevant. Non-compliance with certain laws and regulations, a direct and material effect with the financial statement, the control of deduction and reporting of such non-compliances should be relevant. Internal control system facilitates the effectiveness and efficiency of operation, helps ensure the reliability of internal control, external financial reporting, assists compliance with the laws and regulation, helps safeguard of such and liability assets of the entity. Objective of internal control system. The objective of internal control system is determined by the management after considering the nature of business, scale, objectives, the scale, operation, extent to professionalism, management, etc. Objectives are internal control, document system. Transactions are executed to central specific management authorization. All transactions promptly recorded in the appropriate manner of permit the preparation of financial information, maintain the accounting of assets. Assets and records are safeguarded from unauthorized access and use of disposal. Assets are verified reasonable interval, appropriate action to be taken regarding discrimination. Precisely in the control objective ensure the transaction proceedings are complete, valid and accuracy. In the basic accounting control objective should be sought to achieve by the accounting control system. Ensure all transactions are recorded real and all transactions are properly valid, all transactions recorded timely, all transactions properly posted, all transactions properly classified and disclosed, all transactions properly summarized. If the response of the above and response to the auditor should justify limitation, this accounts balance test constantly in the fact that excellent companies there is a system of particular control found in the deficient and the audit attention is focused on the area where the basic accounting control objectives not being occurred. In the case found the sale transactions are not being properly valued in accordance with the price determined by management. Auditor shall have performed existence search test and a sale invoices and he assure himself in the recoverable amount correctly put as there may be expand the confirmation request as a year end cover the larger majority of trade receivable. Limitation of internal control. The internal controllers, no matter how effective, can provide an entity with reasonable accuracy and not absolute assurance about achieving the entity's operation, financial reporting and compliance objectivity. The management consideration of the cost of internal control does not exceed the expected profit of the enterprise. The fact that more important control do not intend to direct a transaction are usual nature. This potential of human error, such as care of carelessness and distractions, mistake and judgment and misrepresentation instruction. The possibility of circumstances of internal control through collusion of its employees and the parties outside the entity. The possibility of person responsible for exercising internal control which abuses the responsibility of, for example, number of management overriding internal control, manipulating the management aspect of transaction estimate and judgment required by preparation and statement. Structure of internal control. In order to achieve the objectives, internal control is necessary to establish adequate control policy and procedures. Most of the policy and procedures are segregation of duties. Transaction processing are allocated to different persons, such as a man or one person can carry through the completion of transaction from the start to finish, or work of one person is must. It's made compulsory to the work of another person. This purpose of minimizing the occurrence of fraud and error at the timely basis in which there is the rise and following functions are segregated. Authorizing the transaction, execution of transaction, system and physical custody of related assets, and maintaining the records, documentation which allocate duties, furnishing the cost efficient which helps in mind. There is a tendency to stretch an allocation task involves job to more person that is required, resulting in cumbersome of procedures and other elaborate records are unduly high cost acquisition. Apart from the segregation of duty and period rotation of duties, a person also discussed the rotation of duty seeks to ensure that fraud and error is committed by the person. It does not remain undetected or wrong. It is ensured that the person cannot develop and wasted interest by holding position so long. Rotation of duties you ensure that the employees take back works, but this is also employees carefully because they are aware of the performed task well reviewed by other duties rotation. Authorized transaction delegation. A delegation of authority is a different level to particular person to require to establish with the manager to control the execution transaction in accordance with the prescribed condition. Authorization may be general. It may be specified in reference to a single transaction necessary to establish procedure. It provides assurance that transaction authorization is issued by a person acting within the scope of authority and that transaction confirm terms of authorization. The objective can be activity by making independent comparison transaction document in general specific authorization as it may be. Adequate records and documents. Accounting control should ensure that transactions are executed in accordance with the management general specific transaction. Transaction and other events are promptly recorded and correct amount. Transaction should be classified as appropriate accounts as it appropriate period and it is transaction is manner is facilitate preparation financial statement in accordance with applicable financial reporting and accounting policy practice and relevant statutory requirement. The transaction to facilitate maintaining accounting accountability for assets. Assets and records are necessary required to be protected for unauthorized access and use or disposal. Records of asset as efficient description of asset is facility identification. Its location should be maintained so the assets can be physically verified for prompt accuracy, complete and appropriate recording of accounting transaction. Several procedures are often established by the management. This assurance the transaction has been properly recorded as may be obtained through comparison record an adequate source of information which is provide an indication of execution of relevant transaction. The accountability of safeguard asset. The process of accountability of asset is commences acquisition of asset and use of final disposition. The safeguard of assets requires appropriate monitoring record for the periodic reconciliation with the right asset for assets which is cash, inventory, investment scripts and where it requires a frequently physical verification of books and records. The frequency of reconciliation will differ from different assets and depending upon the nature of amount. Assets which is considered sensitive and susceptible of error needed to be reconciled new frequently and error. For a proper safeguard of assets, only authorized person should have access to the asset. If no one is mainly physical access but also exercising control over the processing documents relating to authorization, it uses disposal. It is an assertion to have effective documented right authorization disposal. It is assessed in the high effective control of physical property authority and control. Inventory, investment, other fixed assets. Some of the cases per request and special procedure recording the physical custody of asset as may be disposed management. Independent verification of control system designed independent of management involving periodic review of independent person assess the control procedure to assess operating effectively or not. Such process can be carried out specifically assessed staff under the banner of external audit. Component of internal control system as an internal control law indicate in consider adequate should include the following 5 components: control risk, environment risk, assessment risk, control risk, control activity, information systems and communication, and monitoring control. Components of internal control: control environment, entities, risk assessment process, control activities, information system and communication, monitoring control. Control environment: the control environment comprises the following elements: communication and enforcement of integrity and economic ethical value. The effectiveness of control cannot rise above the integrity and ethical value of the people who create, administrator, monitor. Integrity and ethical behavior are the product of entities' ethical and behavior standard, and how they are communicated and how they are enforced in practice. The enforcement of integrity and ethical value include, for example, management action to eliminate the and migrate the incentives or temptation to might prompt personnel to engage dishonest, illegal, unethical and ethical acts in the communication of the entities, policies, integrity, and ethical values. And this includes communication of behavior standards and highly personal policy statements and course of conduct. For example, communicating with competency. Competency is the knowledge. Competency is the knowledge or the skill necessary to accomplish task and average task in terms of the participation of those charged governance. Entity control continues to influence significantly by charged governance. The importance of the responsibility of charged governance recognized in code of practice and other laws and regulation and guidance producing benefit of charged governance. Other responsibilities of those charged governance include oversight of decision design and oversight of effective operation of a whistleblower procedure and oversight of process for reviewing the effectiveness of the entity's internal control. Management philosophy and operating style. Manager philosophy and operating style encompass a broad range of characters. For example, management attitudes and action towards the financial reporting may manifest themselves through conservation of aggressive selection from available alternative accounting policies and conscientiously and conservationism measures and accounting estimate development. Organization structure: the best establishment relevant organization structure individual my key area of authority and responsibility and appropriate line of reporting. The appropriateness of entities organization structure is part of size of their nature of activities. Assigning authorization responsibility: assignment of authority and responsibility may include policies relating to appropriate business policy, knowledge and experience of key person resource provided by various duty, in addition to making policies and communication directed to ensure that all the person understanding of entities objective, how the individual action interrelated and contribute their objectives, and recognize how and for when they are being accountable. The human resource policy and practices. The human resource policy and practices often demonstrate important matter relating to control consciousness of entity. For example, standard of recruiting more qualified individual. For emphasizing education background, the risk, prior risk experience, past accommodation, and evidence of integrity and ethical behavior demonstrate the entity's commitment to competent and trustworthy people. Training policies and communicate prospective roles and responsibility, including practice such as training schools and seminars illustrate to practice particular levels of performance and behavior. Promoting driven periodic performance appraisal demonstrate the work entities commitment advancement of qualified personnel higher level of responsibility. Entities risk assessment code for the financial reporting process. Entities risk assessment processes including how management identify the assessment relevant to the preparation presentation of financial, including entities applicable financial reporting framework and estimate their significant, assessing the likelihood of occurrence and decision upon action in response to the manage them and relieve resulting from them. For example, entity risk assessment process may address how the entity considers the possibility of unrecorded transaction or identify and analyze the significant entities recorded financial statement. For relevant reliable financial reporting into external internal events, transactions any circumstances that may occur adversely affect the entity's ability to initiate, record, process, and report the financial data consistent in accession of management and financial statement. The management may initiate plan growth action, address specific risk, and to decide to accept the risk because of the cost and the concentration. They address how the assessment possible to unrecord transaction identify as risk can arise and change of circumstances called following. Change in operation environment. A change risk may arise to change in operation environment. Change in the environment and operating environment can result in the change in the operating completely pressure and significant interactive changes. New person may have different focus on understanding the internal control. Change in new risk change Change in risk arises when the new and revamped information system, significant rapid change in information system and change in the risk related to internal control. Change in risk and circumstances are rapid growth and significant rapid expansion operations that strain control, increase in risk compliance process. Change in the risk changes when come to risk, new technology, incorporate new technologies into production process and information system, and change in the risk associated with internal control. Risk may arise due to a change in new technology, incorporating a new technology and process in the production process and information system. A risk in associated with them. Risk may arise due to the new business model, production and activity entered into the business areas, a transaction in which entity has a little experience may introduce a new risk approach in internal control. Risk may arise to corporate restructuring. Restructuring is an accommodation of staff reduction and changes in the supervision and segregation of duty that may change in the risk of associated with internal control. The risk may control expansion of foreign operation, the expansion of acquisition of foreign operation, and carrying new and often unique risk that may affect the internal control. For example, additional changes in the foreign control and changes risk may new accounting procedure, procurement, announcement. This adopted new accounting policies and change in accounting procedure rise a risk of preparation and statement. Control activities. The general control activities are relevant to the audit may characterize as policies and procedures and that pertain the following. Performance review. The following activities include review and analyze the actual performance versus budget, actual performance to the forecast of actual performance prior to the performance, related different sets of data and operating and financial operating or financial related data in one another into another financial to one another. Let's together is analyze the relationship of investigation, corrective action, compare the internal data with external sources of information, reviewing the functions and review of activity and performance. Information process. Two broad grouping of information systems control the activities that is applicable application control. It helps in the process of individual application and general IT controls helps which are policies and procedures that are related to many applications and support the effective function of applicable controls and help to ensure the continued operation of information system. For example, application of control that include checking the automatic accuracy of records, maintaining and reviewing the accounts and trial balance, automated control such as exit check and input data, numeric sequence of check, and this manual checkup and exception report. The examples of central IT controls are program check, ensure and control restrict the access to program data and control over implementation of new release packed software. The control over the software program that restrict the access of monitoring use of system utility and could change the financial data records without leaving audit. Physical control that encompasses physical control assets including adequate safeguarded and secure facility over access to assets and records. Authorization to access to complete program database, periodic counting and comparison amount shown in the control record. For example, comparing the result of cash security and inventory record with the accounting record. The extent of the physical control intended to prevent the theft and access of the relevant to reliability of the system and thereby its audit defense comments of the assets highly spread to misrepresentation. Segregation of duties, assigning a different role of responsibility of authorizing transaction, recording transaction, maintaining custody of assets, and safeguard of duties. Certain control activities depends on the existence of appropriate higher level of policies established by the management of those charges government. Sometimes established by those charges governments. For example, authorization control may be delegated under established guidelines. As investment criteria set up by those charges government. Alternative non-routine transactions such as major acquisition and disinvestment may be specific high level of approval and including some areas at the shareholders. Information system including related business process and relevant to financial reporting and communication. The information system consists of infrastructure, physical and hardware components, and software, people, procedure, data. Information system with extensive use of information technology. Information technology relevant to financial reporting objective, which includes a financial reporting statement and the methods that record all the transactions. Describe the timely basis of transaction and sufficient details to permit proper classification of transaction and transaction reporting. Measure the value of transaction is a manner in which permit the recording this proper monetary value of financial transaction. Determine the proper timing in which financial transaction occurs and permit recording a transaction in proper accounting period. Present proper transaction related disclosure and financial statement. The quantity of the system generated information affects a manager's ability to make appropriate decisions and managing and controlling the entity's activity and prepare for reliable financial reporting. Communicate involves providing understanding of the individual roles and responsibility of individual roles pertaining to internal control of financial reporting may take a change in the policy manual and accounting and financial change in such forms as a take such forms in accounting manual, forms in accounting and its forms in financial reporting manuals and other memorandum. Communication who can be made electronically, orally, and through actions of management. Monitoring controls. The important management responsibility to establish and maintain internal control to undergoing basis. Management monitoring control include considers whether there is an operation of intended that modify the appropriate changes in governance. Monitoring the control may include activities in management review for whether bank reconciliation has been prepared on timely basis. Internal audit evaluate the sales personnel complaints with the entities policies in the terms of sale contracts and legal department oversight of complaints with the such entities ethical and banks practices. Monitoring is done so that ensure the proper continuation of effective control takes place. For example, if the timeliness of accuracy of bank reconciliations are monitored, the personnel is likely to stop preparing them. The internal control personnel perform similar functions, contribute monitoring of entities control through separate evaluation. Ordinarily, they regularly provide information about the functioning of internal control, focusing considerable attention on the evaluation and effectiveness of internal control, communicate information about strength and deficiency in internal control, and recommendation improving internal control. And monitoring activities that include information on communication from external parties that may indicate problem highlight the area need to be improved and customer employees collaborative building data and preparing the invoices and complaints with the charges. In addition to the regulatory any communication entities consumption matter that affect the function of internal control. Example communication control examination of banking regulatory agencies also management may consider communication relating to the internal control from external auditors performing monitoring activities. The overall system of internal system comprises of administration control, accounting control, internal check, internal audit, important functions and accounting control. Internal check system. Internal check system implies organization to overall system of bookkeeping arrangement of staff due to the case that no one person can carry through a transaction and record even aspect of that for in part of overall system controls and operation basically built in divisions of operation job allocation aspect of control content. The system control is effectively way of day-to-day transaction which is operated continuously as a part of routine system whereby the work of each person will be either provided independently by the compatibility of the work of another person. The following objective of internal control: to detect that error and fraud is easy, avoid and minimizing the possibility of a commission of error and fraud by staff, increase the efficiency of staff working performance, allocate the possibility of area and stage of the form, function, actual error, protect the integrity of business by ensuring accounting that always subject to proper security check, prevent the avoid misappropriation, embezzlement, or falsification of account. The effectiveness of efficient system of internal check depends on the following things: clarity of responsibility. A responsibility of a different person engaged in various operating business and transactions should be properly identified. Well integrated organization charts the description and name and responsibility of person associated with specific functions and may help in fix responsibility. Division work. Segregation of work should be made that mandate the free flow of work so interpreted also help the determining of work for one person is complementary other. The suggestion or rotation of different employees through various competent jobs should be effectively implemented. Standardization. The entire process of accounting should be standardized by creating suitable policy commensurate the nature of the business so that strengthen the check of internal control operation. The periodic review should be made certain operations and workflows such a process will be carried out by the preparation of audit flow charts. General conditions pertaining to internal check systems and should be summarized under. No single person should be complete control over the important aspect of business operation. Every employee action should come under the review of other person. The staff duty should be rotated time so that the person do not perform the same function a considerable length of time. Every person of staff should be encouraged to go down a level at least once a year. Person having physical custody of assets should not be permitted to have access to the books of accounts. They should exist in accounting control respect of each class of asset. In the addition, that should be the periodical inspection so establish a physical condition. The mechanical devices such as here should be used, which is practicable to prevent losses and misappropriation of cash. Budget control should be excised and wide deviation observed should be acknowledged. From investigation, investment taking, inventory taking, the close of the year trading activity should be possible suspension. It should be done by staff belonging to several class action organizations. The financial administration provost should be distributed to every judicial over higher official and make it though which is mutual exercise should be reviewed periodically. Procedure should be laid on specific periodic verification and testing in different section accounting workers and ensure that is accurate. The scope of audit and audit is limited in both time and cost. Therefore, the increasing being recognized in the audit to be effective, especially in case of large organization and existence of systems and internal check. The internal check. Internal audit means independent appraisal function mentioned by within the organization to examine the efficient activities and service of organization. The scope of internal audit is determined by the management. Internal auditing includes series of process and techniques through which organization, our own employees ascertain the management by means of all the job objectives. Whether the establishment managing controls adequately they effectively maintain the records and reports of the financial accounting otherwise reflect the actual reporting and result accuracy and reporting. Each division, department, other units carrying on the plant and policies and procedure by which they are reasonable. Detailed discussion of the internal audit chapter 3. Are willing to engage in manufacturing process of textile, the purchase of raw material companies and sell waste textile 12%. It takes to the development divided raw material reach company. Recently company is a revamped internal control system that the coordination has also assumed the charge the head of internal control department few days before assumed charge. I noticed that information system required booking of purchase and purchase ledger stock data of purchase investment only. You deal with the above matter internal auditor. The company is a part of internal control set up by the system under the quarterly budget target and respect of sales and respect of the sales and availability, respect of actual performance. It is involving fixing responsibility of the different product department heads and timely correction. In the case of product department heads or achieving the quarterly budgets, they will be given a detailed justification on the same, also laid down the shortfalls and to compensate the ensured quarterly. Identify the external component of internal control, articulate to the opposite review of a system of engagement. The controlling elements at the tool of organization includes control consciousness of the people. The controlling element includes governance and management functions, which attitudes, awareness, action on charges, governance and management concerning entities, internal control and input of entity. Evaluating design of control involving considerable whether the control individual and in combination with others is capable of effective preventing reduction or correction material statement. Implementation of control means a control exists in the entity using it. This is the types of assessing the implementation of control. This is not effective or the test details of control is considered for improper designed control may present the material weakness significant deficiencies in the entity's internal control. The entity system's internal control contains a manual elements often contains automation elements using manual automated elements in the internal control also affect the manner of transaction initiated, record, process and reported. The entity's mix of manual automated elements and the internal control waves the nature and complexity of entity using the information system. The manual elements of internal control may be more suitable for judgment and description use the following process. A large, unusual, non-recurring transaction components which ensures a difficult and define anticipated predictor in changing the circumstances with hand control response outside the scope of existing component and the monitoring effectiveness of automated control. The extent of the nature of the risk of internal control may depends on the nature and the characteristics of the intelligent information system. The entity responds to the risk arising from the IT from the material element and internal control establish effective control of light and characteristics of entities in control. The review of internal control system enable auditor formulate his opinion in the reliance with the many place and if a system itself. Whether the system is would enable the auditor management to produce a true and fast set of financial statement, locate the areas of weakness in the system so that the audit program, the nature, timing, extent of substance and competence of audit procedures can be adjusted to meet the situation. The auditor is not satisfied with the internal control regarding the trade receivable. He may decide to have a wider coverage of confirmation of trade receivable balances. Normally, the investment in cash is basically verified with the name of the period or routine known as a client to the employees. In the case of the auditors come across the weakness of the control either by providing the program surprise cash out investment verification and they are proceeding and succeeding in the routine verification. In the case surprise check will be more useful in the undertaken for the routine verification is over and similar it will be viewed that because the weak control of possibility wrong billing in the customer access if any extend the program of comparison of invoices or forward notes and checking the extension of casting invoices deciding the point provide understand the review of internal control manner of individual judgment or auditor. It is a decision taken into the consult of the size and the complexity of the client's operation. If the auditor becomes continuous relationship with the client, it's already aware that the feature of efficiency of internal control. He may just review the changes that takes place in the intervention period because the change in the operation of the client. However, the comprehensive review of the cases must be made in the interval of 3 years. Ordinarily, the review of internal control must be undertaken in the distinct phases of audit before finalizing the audit process. However, in the size of operation rather small, the review can be taken in conjunction with the audit procedure and the program can be adjusted in the extension of elimination check. When the auditors find the inadequate weakness of internal control system, he should advise the client about the inadequacies and weakness and consequences of the following. It should be the duty of the auditor to see in the course of audit how the inadequacies and weakness are be removed. He will take into the account of preparing into the report and useful preparation of the following of the functions inside of the audit program. Any change in the system of internal control, the record of appropriate section of internal control consider any further weakness related to internal control and instances where the prescribed system or procedures have not been followed. That should be considered deciding whether the further modification of an audit procedure is called for. It's also called the communicated with the clients and confirming whether it should solve the regarding changes in management. The review of internal control are mainly concurrent with the personnel various organization levels within the enterprises together with reference to the documentation procedure, manual and job description and flow charts and gain knowledge about the controls which auditors has identified significant in an area. Auditor can trace view transaction through accounting systems and assess the understanding of the system and it's related to the internal controls. Auditor preliminary evaluation of internal control should be made an assumption that control operating generally describe the key function effective throughout the period of interference. Purpose of preliminary evaluation of the purpose of the primary evaluation is identify the particular control on which auditor still intended to rely on the test through competence procedure. Different techniques are used to record information relating to the internal control. Selection of particular techniques is used in auditor judgment. Internal control assessment evaluation. The quality and effectiveness of internal control directly depends on the origination environment. It is a tone of the top of the board and execution management. It is a credibility of the message of the internal control. Vision goes to policy and procedures, policy goes to communication to risk assessment, it's going to monitor, then go to vision. And these are the top the tone of the board of executive, that credibility of the messenger internal control. The top plays a role in establishing the control and the following of some of the key component of assessing and evaluating the key control. Standard operating procedure SOP. The well developed SOP helps define role, responsibility, process control that helps clear communication and operating controls of all the touch points and process. Controls are likely to be clearly understood and consistently applied even the employee don't know. Enterprise risk management. The organization which is a robust process is identifying mitigate the risk across the enterprise and periodically review and assess the early identification of gap, take effective control measure and organization and surprising the failure and control like issue. Segregation job response. The key element of control is multiple activities. Transaction decision should not be concentrated with one individual. Segregation of duty is an important element of control, which no two commercial activities should be connected by the same person. A buyer should not be involved in receiving material and passing the bill, and similarly, bank recommendation should be prepared by a person other than who maintains the backbone. Job rotation and sensitivities. Job rotation carry out the same person over the pyramid and likely to lead the competency and possible misuse of sensitive area. The importance as a key communication is a job rotation is regularly followed by the regular age generation. The same buyer continues to buy a product for longer. It is likely to be comfort zone and hence they are exercise adequate control in terms of internal development, competence and and delegation of financial power documents. As an employees grow and employment grows, an organization grows to delegate the financial and other powers to its employees. This clearly defines the document and delegation powers, allows the control to clear the operations without being started by industries. Information technology and layers. With the advance of computers and enterprise resource planning, it is much easier to embed control through a system intended of being human dependent. The failure rate of IT embedded control likely to be low. It is likely to have better audit trail. That is easier to come. For example, stage of consumer involving application of correct rates and involves a credit controls can also be exercised through IT system, IT controls, and improving control environment. Technologies of evaluation of internal control. The following techniques of evaluating internal control. Because of the widespread experience, auditor possesses the business operations knowledge and general about the appropriate control. Thus, the auditor's firms has developed its own exercising internal control, questionnaire, and general applicable laws. Developing a standardized questioning endeavors make it wide possible for all the division. Generally, for found included therein all those who are not applicable particular case. Questionnaire is a set of questions framed with organization manner in each function area, which is the purpose of evaluating the effectiveness of control and detection and weakness in any. And questionnaire usually decides the several separate sections devoted in the areas such as purchase, sales, trade receivable, payable, and wages. The questionnaire is intended to fill by the company's executives who were charged in the various areas. However, the purpose of the particular difficulties. Questionnaire is a travel of executives through. It may be pretty long and fill. The questionnaires may not be readily intellectual, but we see executives and the possible questionnaire being misplaced with the travel one table to other, having response to the difficulties. That's now utmost accepted practice of auditors. The arrangement meeting of the executives concerned with giving an answer followed by the such executives. During the auditors himself may require to fill the answers. In the case, he should require ensure that concerned executives initiate an answer to tokenize the agreement effort. A question so framed is generally to prepare, despite doing recommend detailed answer to question. For example, one central request is broken down into the number of questions, other questions, and enable executive provide yes or no or non-applicable form. The questionnaire can frame which a manner generally no answer will be reflected, and the weakness of a control system. They require giving a positive power of is view this. Keeping a point of proper control and consider the question. All the receipt recorded promptly and deposited bank daily. If we answer yes, it feels that plans have good internal control, but no, then indicates a weakness of the system. Money received was not recorded may be default because the cashiers continue to control over the amount of unpaid claim. However, it should not be taken into unbreathable rule. Question may be framed and yes should be indicate the weakness. It's only thing that is born by the mind of scheme of question should be consistent. Sequential logic and possible collaboration. However, it is a necessary slightly detailed answer to be asking with the bring clarify the matter. It is used and standardized in the internal control questionnaire. Basic assumption of elements of good control taken in account. There certain procedures are generally used for both business concern, establish achievement and labor internal control. This is a time-based assumption by a positive to bank entire reception and our day and daily balances in the cash book and ledger, periodic reconciliation in account control activity. Example, wide use of practices which respond goods internal control. Besides the basic operation, giving a risk of practice exists in the business irrespective of the nature. Organizations such as the permit the extensive distinguish the duties and responsibility. Larger of the organization, greater the scope of division. Employees concerned accounting functions not assigned by the custodial function. No single person's trust or responsibility of completing a transaction or there should be always evidence to identify the person who has done the work and whose body authorization implemented checking. The monitor performed the one expected to comes another review for another usually course of time. There is a proper documentation recording transaction. The questionnaire serves a purpose for the record so far as auditors concerned about the state internal control as given to time officially. The question naturally arises as to whether the necessary to issue a questionnaire for every year auditor engagement. For the first year engagement, issue of a questionnaire is necessary. Subsequently, an auditor, instead of issuing questionnaire again, may request a client to confirm whether the changes in the nature and scope of business has been taken place and necessary to response change in the control system. Whether even without the change in nature and the scope of the business and control and changes as underground changes. If there is a change, auditor should take note in it and enter the appropriate comments on the relevant part of the questionnaire. However, it is a good practice in the case of continuing engagement to issue one questionnaire irrespective of the change and say every third year. It will obviate the unnecessary trouble of filling an answer every time as they extend the client and auditor own time will be saved. The rationale of issuing the questionnaire is every 3 years, which no, in the case when no change lies in altering the claims regarding unnoticed and unspeculated changes, which will result in taking place during the interactive meeting. So it will make the client more control conscious. Questionnaires may prevent various aspects of internal control system. Checklist. In the scenario of instruments of and questions are internal control, the auditor must follow and answer. In a particular instrument instructions is carried out, the auditor trials in the initial space opposite instruction. It is a form of questions. It's generally answer yes or no, or non applicable in the entire opposite question. Checklist is more the nature of reminder. Auditor should remain into checklist to testing internal control. This questionnaire is basically a set of questions put into client checklist, which make form of instruction questions and such points to be checked and maintained. The control won't stop and set of instructions or points which meant by the client is in form of questions, and for questions from checklist may be even method of auditors to say own stuff. Questions of a checklist and we form the following manner, which is illustrative of a good example, like explain answer to the audit stuff. Have you checked the following question? It is responsible for the opening and incoming mail. Does not authorize for the ledger. Does not authorize for expenditure receipt. Have you checked that cashier does not authorize for ledger? Does not authorize or cashier does not authorize for expenditure receipt. Cashier does not sign the check. Cashier does not his annual leave regularly. Cashier does not inks the balances cash book every day. Does cashier verifies the physical cash books and figure books? Does every day? Does a cashier prepare monthly bank statement? Does cashier has any funds and investment? Does no funds of the investment? Does cashier no necessary balance in hand? Does cashier does not pay money without looking into complaints or proper procedures and operation? Does the cashier make tender proper security and other execution of fidelity bond? When the checklist has question form, it is a hard difference from questionnaire. However, a general questionnaire is a popular medium of evaluation of internal control. The basic distinction between the internal control questionnaire and checklist are under the ICQ. Incorporates a large number of detailed questionnaires, but checking it generally contains questionnaires relating to main control objectives. The ICQ is a ICQ questions are usually answered by company executives. However, it is checked same as required to be answered by auditor staff. The significance no is ICQ does not initiate weakness, but the insignificance of the weakness not relevant when automatically. However, the audit checklist the system statements required by the apparent weakness may prove the material relation to the account as a whole. Flowchart. A flowchart technique can be restored the evolution of internal control system. It's a graphical presentation of internal control in the organization and normally drawn up to show the control in each subsection. The distincts of the narrative form providing the most concise and comparative way of reviewing the internal controls and evaluating finding. The flowchart narratives and they cannot perhaps the total banish and reducing the minimum and process. It is successful because the whole control structure aids specifically an essential part, therefore is considered but a whole meaningful manner. It gives bird eye view of the system and draw up the system result of what it is review. Therefore, it however is not understood by the details, not affect the flow. Every detail relevant to the controls or review and details about the operation performance of the inclusion flowchart. Essentially, flowchart is a diagram full of lines and diagrams and it is the additional use of them. That may be probably more effective way of presenting a state of which internal controls of the client of organization. And properly drawn by flowchart provides a neat visual picture of the whole activities and sections and depart among flowcharts, documents, and activities more precisely flow. What is the point of document necessarily intent and receive the existence of the nature of copies in which documents rises and receive the entire and intermediate stage and said sequential through the documents and activities and distribution of documents in various sections and department operations, checking operation, matching the relevant stages, filling up documents and final deposition, sending out the destructuring. As a matter of fact, every sound individual knowledge and individual quality requirements is imperative for adopting a few charting techniques. Evaluating internal control as a demand is high mind and analytical minds able to see clearly the interdivision of jobs and appropriate control. It is stated that the flow chart is made state-wise and department-wise, suggestion-wise, ensure that readability and intelligent flow charts. Drawing of flow charts. A flow chart is normally horizontal one. It is a document activities flowchart section to sections and a concern is section shown the vertical column section. They appreciate the cases of individual who may not show the vertical column. Care should be taken to care the first column and the lower under section. Individual therefore transaction originated and implicit about the column head about the order of flow chart.